Thanks to everybody who did not leave after I posted my little fantasy football DraftKings video. And just so you guys know, I'll be doing those throughout the NFL season. We'll still, of course, be making my usual investing videos. And I just want to thank everyone who stopped by and still showed support, even though they weren't interested in the actual video. And also to those who checked out the video and probably left within 5 seconds. May have hampered the YouTube algorithm just a little bit, but thanks anyway for at least checking out the video. Guys, I hit $13,000 in the portfolio for the first time ever. Let's take a look at my progression here. So as you can see, this has all my milestones of each time I hit a different $1,000 mark. Started off in March of 18 and just continuously kept putting in money now. And now that I'm finished paying off my student debt, I expect this to go much quicker here. As you can see, it's only been a couple of weeks since I hit 12K. Of course, the market has also been doing pretty well, and that's definitely helping, but hopefully this will just keep getting accelerated and keep compounding and keep growing, and I'll definitely keep you guys on the loop. So today we're just going to go over a few dividend stocks that I was able to buy this past week, or a few that I think that are at great trading prices. I won't be going over the full portfolio anymore. I think it's just better to single out a couple stocks every week and talk about them. As always, guys, if you guys are new here, please consider subscribing to the channel to keep going over my portfolio and updates about it, as well as other finance and personal finance topics here. The first stock we're going to talk about actually today is 3M. I didn't buy another share of this, but I just wanted to talk about it because I did a great collaboration with Ryan Giffen. So be sure to check out that video of us together. He actually has the video about the stock analysis I did on 3M on his channel, so be sure to check that out. I also want to say hello to all the new subscribers I gained from doing that collab who came over from Ryan's channel to mine. And hope you guys are happy with the content that I'll be posting here in the future. Again, in that video, I talked about 3M being very undervalued, I think, just because of how hard they've been hit with these trade war talks and tariffs. It's really hurt 3M, who does about a third of all their sales in China. So I expect once that's resolved, 3M will just continue to shoot back up like it did over the past 5 years. 3M still is trading at a pretty good price here. In the past week, it's up 2%. Was down to like the 155 mark at one point, so not too far off of its all-time low or lows for the past year here. And then the actual stock that I bought this past week was AbbVie. Now AbbVie, you guys know I bought this at near all-time highs. It's very hard to time the market, if not impossible. Basically, obviously, I didn't know that the stock would fall as soon as I bought it. It seemed like bought it right here at around this 120 mark, and then it just collapsed afterwards. Now, a lot of AbbVie is actually down 27.3% year to date, while the rest of the pharmaceutical companies are only down half a percentage point in 2019. The reason why AbbVie is doing so lackluster recently has just been because of its flagship drug, Humira, is slowly losing patent protection across the world. But AbbVie has still been doing well in selling that product for the time being. It also has many products in their pipeline. They have a lot of multi-billion dollars in sales potential in terms of new products that they're planning on releasing here shortly. So keep an eye on that for the future for AbbVie. And then the AbbVie is also doing a good job diversifying its revenue base, even without Humira, for the future. So you like seeing that in biopharmaceutical companies that they're not relying just on one company or just on one product for most of their earnings here. And the AbbVie actually acquired Allegrogen, whose main product is the Botox injection that makes you look younger. You guys probably saw that. I think they did overpay for that company, but it's just great that AbbVie now has more products that are able to keep producing revenue for them. And then AbbVie is now trading at a very attractive 6.3% dividend yield. Not accurate here on Robinhood like usual, but that's a very nice yield. That's almost basically getting the full S&P 500 historical return just in dividends, but I expect this company to go up also in capital appreciation as well. And then analysts predict after this merger that they're doing that they'll only be at a 35% payout ratio, which is very good for a company like this that has this ridiculous of a dividend yield. Now, AbbVie does have a huge debt problem, and they definitely did not do themselves any favor when they did the acquisition of the new company, but they're hoping the extra cash flow that they get from it will be sent to help pay this debt slowly off. Plus, the company also raised its guidance in their last earnings report, and to me, that doesn't sound like a company that is shrinking or in dire need of going out of business there. So the second stock is one that I've never actually publicly disclosed that I have in my portfolio just because it's such a small position, but it's one that's getting really popular here, and that stock is NRZ, New Residential Investment. Now, it's only $14 and I only own 12 shares of it, but it's down 15% in the past 6 months here, while the S&P 500 has been up 5.2%. So this might be a stock to consider buying on the dip. For those of you who don't know what NRZ is, it used to be kind of a hidden gem. Not many people knew about it, but now it's in the Robinhood top 100 most popular stocks. It's basically it provides capital and services to mortgage and financial services industries. So it's one of the more riskier investments anytime you're in an industry that's dealing with debt and a chance of someone defaulting on their loans. But that's why I have a pretty small position in them, just under $200. I think it's better to take this risk now than to take it. It's better to take the risk now when I'm young than it is to take it when I'm older and will need that income on my hands here. So NRZ, high risk, high reward here. And NRZ just announced that they're doing a $200 million share repurchase program. For a company that only has $6 billion in market cap, that's a pretty big share buyback. Now, companies will do a share buyback if they feel their stock price is undervalued, and that's exactly what the company CEO said as to justify why he announced the share buyback purchase program. It's also structured as a REIT, and that's how it's able to pay this mouth-watering 13.78% dividend yield. That is absolutely absurd. And so for those 12 shares that I own currently, I'm going to be getting $6 every quarter for owning them. That's not too bad. That's $24 a year on just a $175 investment. So hopefully this pays off in the long run. The only really con that I can see going in the future here is that NRZ hasn't been around for too long. It's only been around since 2011 and it didn't even go public just until a couple of years ago. So they weren't even around during the last recession, and that leaves a huge big question marks on if they can continue this ridiculous dividend yield and dividend payments even in a recession. So I guess that is a pretty big what if question, but again, that's why this is a lot smaller position in my portfolio. And then the next stock we'll talk about is ExxonMobil here. This is one where I feel like it helps if you actually already own a stock, because then you kind of, from the day-to-day fluctuations, you kind of notice what a stock is usually trading at. And, I saw that this stock was down in the high 60s, and I immediately thought it was a bargain just because I usually see this stock in the high 70s. Its 200-day moving average is 76.21. So I bought a few more shares. This is a dividend aristocrat, 36 straight years of increased dividend payments. And Exxon just sold its Norway oil and gas assets for $4 billion. And it's trying to shift more on finding oil bases on U.S. territory, which is very rich in shale production. So just based on Exxon's what kind of business it's in, it's in the oil and gas, petroleum products. That's always going to be a huge need in the world that we live in, and just been very consistent in returning value to shareholders. So that's the reason why I bought this. And the other two stocks we'll go over are Shell, which I also think is also trading at a ridiculously cheap price here. Its dividend yield is close to 7% here for a very blue chip company here, located in the Netherlands, not a U.S. company here. And we know Shell is probably going to be consistent for the foreseeable future and returning dividends to its investors. Then Pfizer, as I've made a video about this before, looks like it's starting to slowly recover now, up 2.3%. Pfizer is also doing a merger with another company, basically going to just do its off-patent products together. So we'll see how that plays out in the future for Pfizer. So as always, guys, be sure to let me know what you're thinking in the comments. Do you think any of these stocks are great investments? And be sure to hit that subscribe button and like the video for the YouTube algorithm.